Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 26th of May. It's been a pretty good week for US markets in particular. Much of this, of course, is around hopes on a new COVID vaccine. There's a stock in the States called Moderna, which has had a particularly good run on the basis that it could be one at the forefront of actually coming up with a COVID vaccine. In fact, in 6 months, it's seen its share price rise from $20 and currently stands at about $67. Not all plain sailing in the States, however. We've seen some resurfacing of tensions between the US and China. Obviously, the US-China trade spat was a large feature of 2019, not particularly helping sentiment. So the year-to-date numbers at the moment, the Dow Jones is down 14%, S&P 500 down 9%. The Nasdaq is actually up 3.5% in the year-to-date, and the FTSE 100 remains down around 22%. The Nasdaq, of course, technology-laden though it is, has been a feature of this year as we change the way that we have to live. In fact, it's also quite heavily weighted. If you look at the Nasdaq, just 5 stocks account for 40% of the market value. Those 5 stocks being Microsoft, Apple, Amazon, Alphabet and Facebook. Turning to next week, it's just 4 days, both in the US and the UK. We've obviously got a bank holiday. The US have Memorial Day on Monday as well, and not too much to report in terms of company reporting in the UK. British Land are going to have some full year numbers out. Obviously another property company which has been under the cosh. Shares down about 38% in the last 3 months. Recently had to suspend their dividend and stated that around 90% of its retail units were currently closed. An update there would of course be welcome to see what they think on the current trading situation. Half year numbers also from the soft drinks maker Britvic, again a stock which has been slightly hammered, down 27% in the last 3 months. Needless to say, as a supplier of soft drinks to pubs and restaurants, its short-term prospects are rather limited. And finally, Daily Mail in general. This is a stock where one normally compares print versus online advertising revenues. That will remain the theme, of course, coming through. The shares there are actually up 12% over the last year. Thank you for watching. Have a great week.